Dan Rayburn is a principal analyst at Frost & Sullivan, and Brett Sifling is the investment advisor representative at Gerber Kawasaki. Dan, I want to come to you first, okay? Tell me, you've been on Disney Plus. How's it working? Because apparently people are having trouble getting on.
Yeah, unfortunately, Disney's having some problems this morning. They're still working on it. We don't know what percentage of total users it's impacting, and users are having a problem primarily with logging in and what we call authentication. Just basically authenticating that there's somebody who can actually get it. But Disney will solve it. I think it's going to take them all day. Obviously, they're hoping to get it solved as quickly as possible, but they will get it solved. Rolling out these services at size and scale with quality is a difficult task, even if you're Disney, and pretty much every other service has had problems in the past as well.
Were you able to get on, Dan?
I was able to get on. I was getting some Air 41 codes in terms of media not available, but I was able to authenticate. I was able to set up profile accounts. So it's been a little different for everybody. Not everybody's experiencing problems, which is good. We don't know what limit people are having in terms of how long it's going to take them to solve it, and Disney has not said what percentage of total people are having issues, so that we don't know.
Okay, and of course, we're looking at the tweet right now. Their explanation is the consumer demand is so high and above expectations that the media is not available. Not exactly great for a media app. Brett, you guys like Disney, right? Tell me if any of this stuff matters, or if it's just the library of content that makes it a buy.
Yeah, I mean, we're extremely excited about this launch. I mean, I have friends that literally took off work today just to binge watch Disney Plus all day. And Bob Iger's been on a mission really over the past decade of spending over $80 billion on these acquisitions just to get enough content for this. And it's going to be amazing.
All right, so how are you going to, though, gauge how amazing it is? I mean, do we need to start waiting for the Rotten Tomatoes score to roll in? I see Mandalorian's got an 89% on the meter so far.
Yeah, well, I mean, the hype around this is insane in the media right now, and they've done an excellent job with their distribution agreements, whether that's, with Apple or Amazon, or personally how I got it through the Verizon Unlimited plan. And so I really think that was kind of the secret to success already.
Yeah. Okay, so as we look at this, obviously there's a huge slew of competitors. Dan, what are you going to be using as an analyst to figure out how it sits next to other offerings?
Yeah, great question. Well, the first thing is the slide you're showing here. It says, remember this day is the death of cable TV. That's probably the most absurd thing I've ever heard. Netflix was supposed to be the death of cable TV. Hulu was supposed to. Amazon Prime was supposed to. Apple iTunes was supposed to. This is not a cable TV service. This isn't live. It's not news. It's not sports. It cannot be compared to live streaming. What we have to look at in terms of the service and how successful it is how many subscribers do they get? That's first and foremost. Second, what is their churn? How many people actually cancel the service after a month or 2 or 3 months? How many people signed up just for the free 7 days and then don't actually continue it? So we have to look at time viewing, and we have to look at subscribers, and we have to look at churn.
Okay, so Brett, what do you think? Is death of cable TV for real, or is this just now adding up to where we're basically paying the same price as cable? Is it cable back from the dead?
No, I have to disagree, and I think it is the death of cable TV. This is going to be a staple for the American culture going forward, especially in the streaming space. I mean, if you have kids, you're going to have Disney. It's very complementary to Netflix, so I think that this is just something that they add on, and I think it is the death of the TV bundle.
Now, does that mean you want to own them all, or do you still have to, I mean, does one get a diversified, do they get their own bundle of stocks that offer these? I mean, we're looking at all of them right now. You got to be ready to shell out $263 for Apple, $290 for Netflix, list goes on. Brad, do you want to own them all?
Yeah, I think more Disney is the front runner here. I mean, Netflix is, still obviously a little expensive in our eyes. But, I think Apple's Tim Cook could really take notes from Disney here. This is what going all in on a streaming service actually looks like.
So, Dan, if it's not the death of cable from content, and you do have a cable company, AT&T, that now is dabbling in both, is that the way to play this?
Well, it's interesting in terms of how this content is bundled, right? That's really what we're looking at right here, is the bundle. AT&T gave out an interesting stat during the launch a few weeks ago where they said if they can reduce churn in their wireless subscribers by 1 basis point, they'll save $100 million a month. So think about that for a moment. If you're an investor, that has a huge impact. So there are definitely different ways companies are playing this based on their diversified revenue stream. Disney can promote this across theme parks, toys, movies, cruises. Everyone really has a bit of a different business model. So to compare them from the exact same business model and metrics, we can't do that yet. But the big thing with Disney is we have to watch at how many subs they get and how quickly they actually get them.
Now, one of the things here, of course, is they've got a big library. Now, one might be, deluded to think that means they don't have to spend as much, but it looks like so far they are going to spend. But Brett, is it a positive that they do still have a big catalog, or is that just kind of a cherry on top if people are still more interested in the new content that's being produced hand over fist at Netflix?
Yeah, I think it is the cherry on top. I mean, Disney's spent the last few years pulling content from all the different service providers. And now, if you're a superhero fan, like, you're going to this platform, and not only just for the original content, but the new content that's coming out, like The Mandalorian and other, Star Wars things that are rolling out in the future.
Yeah. All right. Hey, Dan, last thought on this. What are you going to be using to judge? I mean, do we need to go by, the Rotten Tomatoes scores? I always kind of joke about this, but eventually people are going to have to pick what's good over what's bad.
Yeah, it's a great question. You have to figure out what type of content you want to watch, how you want to watch it, whether live matters to you, what kind of bundle you might want it in, and ultimately, what do you want to pay? So I think at $7 a month, you're going to have a lot of people who add this. I don't think they're going to cancel other streaming services. However, churn is going to be interesting to watch, because since you can start and stop these services so quickly, a lot of consumers are going to start them, cut them off, binge watch, and go back and jump between them all.
All right. Well, hopefully they will grace us with some churn numbers, and we'll be able to track along the way. Guys, really good conversation. Dan Rayburn, principal analyst with Frost Sullivan. Brett Sifling is an investment advisor representative at Gerber Kawasaki. Nice stuff, guys.